So let's talk cash flow from financing activities. It's important. We'll talk in the next video after this about the product life cycle and how different phases, each of these elements, operating, investing, and financing, have a life of their own. But right now, we're going to deal with the last category of financing. So we're going to look at our financing, our cash flow from financing. And as we look at that, we're saying, okay, where does financing show up on the balance sheet? It shows up as non-current liabilities, long-term liabilities, and shows up as equity. So those are the changes we're going to be looking at and analyzing. So to determine the cash flow from financing, we're going to look at the changes in liabilities and stockholders' equity that were not used in operating activities. So most of the current liabilities were used in operating activities. Some may not have been used though, and we'll use those now. And our objective is to identify financing cash flows related to these changes. So financing activity, changes in debt, and stockholder equity. So we're going to be looking at those things like loans and bonds, and even current stuff, some short-term notes payable, current maturities, long-term debt. Those are actually considered financing, and not operations. So there we are. We have common stock change, retained earning change. We have accounts payable. Accounts payable, income tax payable. That's not, there's no debt that we're worried about here. Those are all operations. So looking at the changes of where things are at. So we have the things going on, changes in common stock, and we do have changes in retained earnings. Both of those elements need to be recorded and accounted for in the financing section of the cash flow statement. Now we look down here, this is our summary of, we have our greens, our reds, our purples. And the greens are the operating stuff. The reds are, that's the investing stuff. And the purples are the equity stuff. So that's what we're looking at. That's what we're analyzing. And operating, investing, and financing is where we're classifying things. Supplemental disclosures. There's going to be a couple other things that with the indirect method, we also need to separate out. Cash paid for interest and for income taxes. Those are special cash, those are isolated cash payments, separated cash payments. And we want all non-cash investing and non-cash financing transactions to show up. So if we exchange property for stock, I've got an investor and they said, you know what, I'll give you my land if you give me some stock. That's a non-cash item, but we do want to disclose on the cash flow statement to be aware of what's going on. Again, here's a closer look-see at a sample cash flow statement. We start off with our net income. We jump down to non-cash items. Then we have our current assets and current liabilities. Cash flow from operating, positive 15,000. Cash flow from investing, we sold some land. We bought some investments, but we still had a net positive cash flow. And then we had financing activities. We paid dividends, that was negative, but we issued common stock. And so our net cash flow from financing is a negative as well. So the net is 15 plus 13 minus 3. So a net of sources or positive cash flow of 25. We started with 10,000, which is last year's balance sheet cash, I'm sure. Ended up with 35,000 this year's. And then we have some supplemental disclosure at the bottom. I mentioned that you wanted your income tax, cash paid for income tax, for interest, and non-cash items related to financing or investing. That summarizes, gives us a grand total of what we're looking at when we're checking out our cash flow statement. This is the cash flow from segment for financing. Thank you for listening. We will continue onward and upward, and we're going to start interpreting these statements. Now that we see how to prepare them, and they're not that hard to prepare, as long as you understand which direction things go, whether they're increases or decreases to cash. Again, sources, increases, uses, decreases. Thank you very much for your indulgence, and we will see you again soon.